I like to think of financial planning through a car analogy. Our destination is the goal that we're headed towards. Most people, the destination is freedom. Freedom to do what they want, when they want, with who they want, for as long as they want. Now, that freedom for somebody might look like an RV that they can drive around the country. Somebody else, it might be having a house here in Michigan and another one in Florida for when the bad weather hits. Ultimately, the destination's what's most important because it motivates all of the decisions and the sacrifices that we have to make along the way to achieve that thing that we want. In our car analogy, the car itself is the portfolio. It is the tool that we use to get to the destination. Essentially, a portfolio is simply investing and savings paired together. Clients save money, and then financial advisors invest the money for them and grow it. Now, the portfolio is a tool that we use to achieve our goals, to get to our destination. The most important thing is that we move, right? We can't just sit in this car driving 0 miles an hour and expect to get to our destination on time. A car going 75 miles per hour will experience more bumps along the way than a car going 25 miles an hour. But the car going 75 miles an hour will reach the destination faster. Periodically, we look back at our clients and we ask them, how fast do you want to go? And they just kind of look back at us wondering, well, wait a second, is it okay to go fast? Should I be going slow? What's the weather like? Let me look outside. Can you tell me what you see out the front windshield about the weather? This question is not only natural, but what I want you to know is it's completely irrelevant. Just like you wouldn't stop driving your car because it's raining outside, you don't want to be stopping your investing or your savings because you feel like the financial weather is bad. It's always a good time to invest. It's always a necessary time to invest. We should be paying attention to our portfolios, not the financial weather. The portfolio, the saving and investing is what's ultimately going to take us to our destination, and the weather is irrelevant.
Now, you might be wondering, Carl, if the weather doesn't matter, what does matter? Well, that question sent me on a journey 26 years ago that completely changed how I invest.
I'm sitting here with a book that I recently just read. So this is actually a book by David Gardner. He's one of the Motley Fool brothers, and his book is called Rule Breaker Investing. My dad, my brother, and I had all read his previous book called Rule Makers, Rule Breakers. That book inspired a lot of my investing philosophy. It inspired the philosophy around picking a group of stocks, hanging on to those stocks, adding to the winners, shedding some of the losers along the way, and most importantly, letting my winners run. But today we sit here 26 years later, the Rule Breaker portfolio is one of the best performing portfolios I've ever seen. It's averaged an annualized return of over 20+% based on their own numbers. What started out as kind of a theory has actually worked fantastically well, not just for David, but for me and for the clients that have employed this strategy. You can create real wealth, exponential wealth. These are things that today here at Verde we do as a course of doing business, and we haven't just found one super stock. We've found 10, 20, in some cases more than that. This book, I think, will help you understand that stock investing is not about consistency. It's about essentially taking risks and having those things go up 10x, 20x, 30x, 100x. That's really the secret to the stock market that I don't think people really understand. It's not focused on we need to make money. It's not focused on we need to limit losses so that basically there's no losses in the portfolio. That's not how market works. Markets work by essentially trying to hit a couple of really great home runs.
And here's the thing, when those home runs happen, the hardest part isn't finding them. It's holding on when everyone around you is screaming to sell. I learned this with Netflix, and the clients who trusted me through it learned it too. 2011, Netflix announced they were splitting their DVD business to focus on streaming. Investors panicked. The stock crashed 80%, from $350 a share down to just $60. Our clients were furious. Some called and said, Carl, stop buying Netflix. This is insane. But remember those small weekly decisions from my last video? The client who trusted our process during that panic, who said, keep going, well, we bought at 170, then at 120, then at 80, and on the way down. They were the ones who built real wealth. We had one strategy: trust the team, let our winners run, ignore the weather. Netflix recovered, then grew. Today, it's one of the best performing stocks. Clients who stayed in the car during that 80% drop, they've seen their money 10x from that point. That's the home run. That's what I mean when I say the weather is irrelevant.
And it turns out that one really great success in the stock market erases all failure. Investing is about paying attention to the things that matter. The things that matter are your destination, the portfolio along the way, and a financial advisor that can help you navigate this. Call us. I've got a link in the description below where you can actually schedule a meeting for us to come in and have a visit with you and determine if working together makes sense.